got a couple of managements, so let's get straight to that.
Matching the color on your shirt, Nigel. But yes, indeed, a couple of managements on the show. We're being joined first by the management of Alembic Pharma to discuss the road ahead for the company. It was a drag in their earnings in the third quarter on the back of muted India business and lower operating leverage as well. The profit was also down on a year-on-year basis. Pranav Amin, who is the managing director of the show, is joining us now. Pranav, good morning. Thank you so much for joining in. On the domestic formulations business first up, it was a subdued quarter, right? A 3% growth this time compared to 5.5% that you grew in the second quarter. What therapies are doing well, and so what are the others that you need to scale up a bit?
Yeah, absolutely. I think, hi, good morning. Thanks for having me there. Overall, if you see, net revenue was up 4%. Within that, the India business was up only 3%. That was still not as happy a performance as we'd like. I think the acute has been a little slower, not just for us, I think the entire market. But a few bright sparks that we had in the India business. Our specialty grew about 6%, so that is still better that we did in that. And the veterinary continues to outperform, so that was about 20%. I think we're just making some fundamental changes in terms of enabling the MRs more, focusing on execution using technology as well. So let's see, I hope the next couple of quarters we should see the rebound in the domestic market with market-beating growth.
All right. Hi, Pranav. So you admitted, right, that domestic business, the growth is a little bit subdued. You're likely to be better. It was in low single digits at 3%. What's the outlook on both the businesses? On the domestic business, what kind of growth are you looking at, say, in the quarter four, as well as for the next year on a year-on-year basis, if you could quantify it? And the US business, that was a pleasant surprise at around $62 million. I think most of the street were in that vicinity of around $56, $57 million odd. So what is the quarterly run rate likely to be from here on?
So good question. I think with the India business, as I said, we've just made some fundamental changes. We're focusing on execution. So I hope in the next couple of quarters, we get back up to market growth at least. And hopefully in a few quarters after that, beat market and grow faster than the market. So that should be there. I think the veterinary, as I said, has been outperforming the market, growing at about 20% plus. So that will continue to do well. If you come to the international business, both the international formulation businesses, be it the US generics, which grew at 10%, and the rest of the world generics, which also grew at 10%. Q4, I expect even stronger performance from both these units. I think ROW should grow at least 15 to 20% in Q4, and US also will grow in excess of 10% in Q4. Actually, the Q3 growth in US, while the revenue growth was 10%, but volume growth was far higher.
What about the API business, Pranav? Because the last time we spoke to you, you mentioned that it's under pressure. You will see some pressure over the next 1 to 2 quarters as well. Is this the quarter where you see a bottom and then you start moving higher as FY26 begins? Or do you see some more pain? And also, what's the pricing scenario currently on ground?
Okay, so good analysis. Actually, so the API business, yes, as I mentioned, a couple of quarters, we've seen it's been quite sticky and very slow, the API business. That's because of a lot of pricing pressure from China and other countries. And our API business has been traditionally a very high profit margin. But I think we've just had to recalibrate ourselves. I think this should be the last quarter of degrowth. In my opinion, it'll start growing Q4 onwards. At least it'll match the last year's revenue and then slowly get back to growth as we pick up more business in the next couple of quarters. As regards the pricing pressure, there is still pricing erosion in the US market. As I said, our revenue growth was 10%, but volume growth was far higher, almost 30%. So we could see there's some erosion. But however, we're managing and keeping that in check by picking up market share as well as new launches. So we launched 2 products in the last quarter, and we expect to launch about 5 products in Q4 as well.
Let's get to the profitability aspect then, Pranav. And before we do that, if you could tell us what is the industry growth for India you're factoring in? Because as you said, you'll get back to industry growth and then you look to outbeat industry growth. So what kind of numbers are you factoring in for the industry? And on margins, you've been steady, 15.5% or thereabouts. But you've told us in the past that in the next few years, you want to go to around 18%. So should we be working with 100, 150 basis points improvement, say in the next fiscal, and then following that another 100 basis points, so then you'll get to around that 18% mark?
No, absolutely right. I think what we have to do is part of the this year. Actually, we should have done better. But 2 things: one, as I mentioned, the API business was a little bit of a surprise, and that's been drilled down. I think it started with few big customers, and then we've seen it across the board, some pricing pressure. That should rebound, as I mentioned, Q4 onwards. The India business has been slower than market. For me, I expect market should grow about anywhere between 6 to 10%. I would say 8% or so would be fair enough for the market growth. So let's see how that goes next couple of quarters. We'll wait and see. And again, about our margins, yes, I do expect that we should get to the 18% kind of margins in the future. That'll happen because of a few things. One, as we add more scale to the US business, ROW business, these two underperforming businesses also start performing. And thirdly, we have a lot of these capabilities that we've created, which right now are a little bit of a drag. So once they start doing better, which is the injectables and the oncology facilities, you'll automatically see a bump up in the margins, net margins.
Two-part question, Pranav. You have a lot of high focus therapies, right? Be gynecology, anti-diabetic, ophthalmology. Are your subsequent launches going to be focused on these specific areas? And lastly, also, if you could share us some insights on your animal health business, what kind of growth are you penciling in for FY26 for that?
Yeah, so you're right. I think the four therapies that we're focusing on in India quite a bit is these are the relatively newer therapies for us, because as you know, historically, we've been quite strong in acute. So the newer therapies are ophthalmology, derm, gynecology, and diabetology. So yes, we will see a lot of launches in these therapies moving forward in the India business. The veterinary business has been an outlier or a great performer for us, I think, in terms of the market as well. That grew 20%, and it's not just now. I think over the last 15, 20 quarters, that's been just going gangbusters. We focus mainly on the livestock and the poultry, and we're doing new product launches there as well, and that's doing pretty well.
All right, Pranav, thank you so much for sparing time and joining us this morning. Wish you good luck for the road ahead and your subsequent launches as well. The management there of Alembic Pharma on the road ahead for the company.